Hi folks, you're welcome to the next episode of ICT Concepts. Okay, in the previous video, we looked at liquidity pool and then how you can be able to get a perfect entry. Okay, so now in this video today, we will now be looking at the indicators that will show you that the market is going to reverse at a given point. Okay, now looking at this point, we have previous highest points, in these charts. Okay, now we have a previous highest point here, and then we have a previous highest point here, and then also we have another previous highest point here. Okay, now if you look at it, we have another highest point here, we have another previous highest point here. So now the question is, how sure are we that the market is not going to reverse here? Now, when the market was around this point, okay, when the market was just coming down around this point, and then it decided to come up, okay, by the time it came up, it decided to move up to this point, and then after that, it now reversed again a little bit and then continued going up. Okay, now one of the things I will want you guys to know is that there are things that you will need to look out for before you conclude that the price is going to reverse at some point. Okay, now one of the things we will be looking at today is the power of fair value gap. Okay, now for you to understand what a fair value gap means, we will need to make an illustration of what a fair value gap is in the whiteboard. Okay, so now this is it. A fair value gap, for you to be able to understand fair value gap, you need to look at three different candlesticks. Okay, you look at the first candle, this one is the first candle, then this one is the second candle, and then this one is the third candle. Okay, so what you will do as an individual is that you will first of all look at the first candle, which is your candle number one, and then look at the lowest point. Okay, then you look at your candle number three, okay, which is going to be the third candle, and then you look at the highest point. This is a downtrend or a sell fair value gap. Okay, now if you are trying to understand the fair value gap in the sell market, then what you should be looking is the distance between the lowest point of the candle number one and then the distance between the highest point of candle number three. So all the body of candle number two that is between these 2 points, that is what forms a fair value gap. So the space between these two lines, which is a line from the lowest point of candle number one and then the line from the highest point of candle number three, then this is the fair value gap. So the gap between these two candles, this one and this one, is the fair value gap. I hope you have understood that one. So this one is a bearish fair value gap. Now we have a bullish fair value gap. Okay, now it's still the same concept, but then in this case, you are looking to at the highest point of the candle number one and then the lowest point of candle number two. On the previous one, you are looking at the lowest point of candle number one, but in this one, you are looking at the highest point of candle number one, and then you look at the lowest point of candle number three. Okay, so the space between these 2 points is what we call the fair value gap. So anytime you hear I mention fair value gap on these videos and episodes, then you should know that this is what I mean. Okay, and you need to have three candles set up for you to be able to understand that. Now back to our video. So now, for you to be able to understand whether the market is going to reverse at any given point, is for you to look at this fair value gap setup. Now, as the price comes up to this point, you will be looking at it and then saying, okay, now is this price going to reverse at this point, or it is going to continue coming up? Okay, now you will be asking yourself that question because this is also another stop order point. Okay, because other people's stop loss will be around this point and then other people's stop orders will be around this point. Then you'll be asking yourself, is the market going to reverse around this point? Now, after I am able to after I finish explaining this video for you, then you can be able to know whether the market is going to be reversing at any stop point. Okay, now let's dive down straight, guys. Okay, so the first thing you need to do is you identify your previous highest point, close to your price movement. So now I have drawn my horizontal line. This is a previous highest point close to this point. Now I have drawn this my horizontal line, so let me expand the candles so that we will use this horizontal line to show us the previous highest point. Okay, so now if you look at it, when the price was around this point, coming up, this particular level, okay, this particular level is something that you will be looking at and say, okay, now let me monitor this point. Since I have a highest point, the previous highest point at this point, Then let me monitor and see if there's going to be any reversal around this area. And if you are not able to see the things I will be showing you on this video, then it will be at your own best interest to ignore this setup, okay? Because those are the things that will give you a signal as to whether the price is going to reverse or not. Because you don't just jump into a price, into a trade because you are seeing a previous highest point and then you just conclude that it's going to be a liquidity area. You don't just conclude like that, because there are previous highest point that even when the price goes up to, it doesn't reverse. And if you look at this particular setups I'm going to be showing you, then it will give you an information to take your decision. So the first thing you will be doing is to look out for any reversal area around those areas. So let us go up to our 15 minutes. Okay, let us go up to our 15 minutes and start looking at it in the 15 minutes time frame, so that we will be able to understand all these things. Okay, now this is it in our 15 minutes. What we are now looking at is, okay, now that this price has gone up and have crossed this particular point, this particular um reversal point. Okay, now we are going to monitor what the price is doing at then, because you will understand that the price, when it was approaching this point, it was slowing down, it was moving at a very slow pace, and then it was reversing, forming as though it is going to form a trending market that is neither an uptrend or a downtrend. Now look at it here. When the price came and approached this point, it decided to slow down a little bit, make another candle which did not go up again, came down and closed at this lower point. It formed another candle again, it decided to come down and then close at this point. This also is telling you, that the price is beginning to slow down, and then it formed this long candle and then it decided to retrace down again, okay, to this more than 50%. This one is more than 50%. If you draw your Fibonacci, you will discover that this price reversed by more than 50%. And anytime, I said in the previous video that if you see the price reversing by more than 50%, then is a sign of reversal. Now you need to look at all your indications of price reversal. What is your first indication? Your first indication is this, liquidity pool area. That is the previous highest point. This one is your first indication of price reversal area. That the second indication you have here is the price retracing back by more than 50%. Now, let me draw my Fibonacci so that you will be able to understand what I'm talking about. Now, the price moved up from this point to this point. If you look at it, this was the 50%. This is the 50%, and this is the 60%. And anytime you see it moving down below the 60%, I mean, not the 50%, because usually your entry point when you are looking for a best entry point is the 50%, between the 50 and the 60%. Now anytime you see the price coming below the 60%, more than the 60%, anytime it is retracing, then it is an indication of the market reversal. Okay, so now you have gotten your second indicator as to what is suggesting to you that the market is going to reverse. Now the third thing you should be looking at is a fair value gap that is forming around this area. Now, you look at all the charts, okay? Now, as the charts are forming, you will be looking for a fair value gap. Now, is there a fair value gap between these three candles? There's no any fair value gap. Now, you look at this down candle again, downtrend candle again. Is there a fair value gap forming around this area? There's no any fair value gap forming around this area. Look, you proceed again and then look at this downtrend. Is there a fair value gap? There's no fair value gap. You look at this point, okay? Is there a fair value gap? There's actually no fair value gap, because the lowest point of this candle and the highest point of this candle are overlapping. So there's no any fair value gap. What about this point? What about this point? What about this downtrend? There's obviously no any fair value gap. The next thing you should be doing is to look, at the lower time frames and then try to see, is there any fair value gap forming around that area. Now, let us go down to 5 minutes. Okay, what you should be doing is to be going down to a lower time frame to look at what the price is doing, and then see if you can be able to get a fair value gap around that area. Okay, so now let's take a look at it, guys. Now, what is happening here? You can see there's a fair value gap that formed around this area, okay, in our 5 minute charts. Okay, now if you look at it, let me draw it so that you guys will see it. Let me draw it so that you can be able to see what I'm talking about. So now the price came, this point, it closed. Look at this black line I'm showing. Okay, let me adjust the line a little bit lower so that it doesn't overlap with that blue line for you guys. Okay, so now you look at it. Look at the lowest point of this candle number one, and then look at the highest point of this candle number what? Number three. Now let me draw my line. You will discover that there is a fair value gap around that area. Can you see that? So now once you are able to see a fair value gap that is crossing down, after the line broke out, it you know broke out this resistance line, because this one, the previous highest point, is a resistance line. Okay, so you are seeing the price breaking off, this resistance line, which is the previous highest point, and then by the time it broke up, it now decided to reverse down, and then it broke down below the line again, forming a fair value gap around that region. Okay, that is an indication for you that, oh my goodness, the price is trying to reverse down. Okay, now you are able to get a fair value gap in your lower time frame. Now let us go down to 1 minute chart and see if we can be able to get a fair value gap also in the 1 minute chart. Okay, now let's go down to a lower time frame and see what the price is doing in that area also. So I want you guys to pay so much attention to these things. These things is forming almost every week, and it's going to be very, very helpful to you if you really try to understand these indicators, and then you will be able to make off a lot of profit in the market. Okay, so now let's look at 1 minute. Okay, now this is it. Is there a fair value gap in the 1 minute chart crossing down below the line? Now look at it. We have a very strong fair value gap here. You can see it here. This is our three candle setup. This is our three candle setup. This is our three candle setup. This is candle number one, number two, and number three. Now, if you look at it, if you draw your line from the lowest point of candle number one, then you draw your line from the highest point of candle number three, you will see a fair value gap forming around this area. Okay, and then also this will be able to give you an information of what the price is trying to do, and also that is your indicator number three. Okay, now we have three indicators. The first one is this previous highest point line at this region that I just draw, and then the second indicator is the price slowing down, around the region, and then indicator number three is the formation of fair value gap around that region, a bearish fair value gap. Now the last indicator we will be looking at before we decide as to whether we are going to go short at this point or not is there a range in market, like forming an indecision. Now you will look out for range, around that area, and then price movements and reversals. Okay, now you will look at it. There is a very serious range in this area. Now let me draw this line. Let me draw another line so that we can be able to see this range. Okay, now this is more or less like a line between which the price is just moving. Okay, you can see it. It was just ranging, ranging. Okay, just ranging, just moving, an indecision area. Instead of the price to just shoot up and move up, it keeps on reversing, coming up, forming a range, which is now suggesting to you that the price is about to reverse. Then we will now look for our final fair value gap that will form, that will give a very serious movement in the market. Now if you come to this point, you will see a very serious fair value gap. Now look at it, guys. Look at this point. This is a very serious fair value gap that we just saw in that our 5 minute chart. Now look at it. The price, when it was just ranging around this area, just moving around this trending line, the market is just trying to get people confused, before it takes its own decision. Now look at it. When it came down here, other people who are looking for what? For the buy around this area, the market was just busy moving, and making a range, and then it decided to form this fair value gap. Now let me draw this fair value gap for you guys. This point down to this point, it have formed a very serious, fair value gap between the above the line and then, below the line, which is going to be a perfect entry indicator for anyone that is on this trade. Okay, what you will now be doing is that Once you are able to get this fair value gap and the price is forming, you should now be looking at the midpoint of this point, of this area. You should be looking at the midpoint of this area, because this will be your perfect entry point, to your own, trade. Okay, because it will give you the perfect entry that I am telling you guys. I assure you guys, if you follow these things, you are going to go into profitable trades all the time. Now now what you are supposed to do is just get your Fibonacci. Draw your Fibonacci from the, lowest point of, the lowest candle, of the third candle, and then draw it up to the lowest point of the first candle. That is from the point of the highest point of the third candle up to the lowest point of the first candle, and then the midpoint is where you will be looking for your own discount. Once the price comes up to this midpoint, this is your 50%. Once the price comes up to this point, then you are good to go. You are good to go. Now let me just delete this line so you can see what I'm talking about. Now, as the price form this serious fair value gap, part of the gap covering the upper part of the line and then the lower part of the line, then this is a perfect indication that the price is now making a decision of coming down. Okay, if the fair value gap is not formed above the line, then it's still questionable. Okay, you should sit and be watching and be observing until you are able to see a fair value gap that forms part of the gap, above the line, that is drawn on your previous higher point, and then below it. If it cuts across this line, then you have a perfect entry point. Now, this is the midpoint. As the price came down here, don't just rush to go and say, oh, the price has formed a fair value gap, let me jump in and buy. No, 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 no. What you should be doing is allow it to come up to discount. Let it give you a discount to the midpoint. By the time it gives you a discount to the midpoint, you activate your trade. Now, this is the best point you can activate your trade. By the time the price was coming up, it was coming up, you activate your trade here, then you can be able to put your stop loss around this point, because I'm telling you guys, the price will not exceed this point again. Okay? Because you have seen what the price have done after forming this fair value gap, coming down very seriously, retrace up again, and then it decided to come and then shoot up to this point. That is the midpoint of this fair value gap. Now, by the time you activate your trade, the price will just only go up to this certain level, which will not reach up to the point where your stop loss is. It will now start coming down. Now, let me show you guys. Let us now look at what the price did. It decided to just give you this discount. It started coming down, retrace up, come down, and then it came down very significantly. Now, let me show you. Let me show you how many pips you can be able to harvest using this very strategy if you really pay so much attention to it. Now, this is where I said our entry point is. This is where our entry point is. Now, let us measure how far the price went down. Okay, let us measure it. Can you see it? This is by up to 63, pips. Okay, 63 pips price movement, which is the percentage is 41. You can be able to harvest up to like 41 pips. Okay, now that is how you can be able to use your precision entry, and if you are patient enough, you can be able to get even a very serious downtrend from this point. Okay, now look at it. Look at how the price came down very seriously from that point. Now look at it. This is the entry point, this black, line, just this black line. Okay, now let me compress it so that I can show you how far the price moved down without coming up to that, stop loss that we put there. Look at it. This is it. From this point, it came down by more than 100 pips. Imagine using a lot size of one, that is $100. A lot size, that is uh a lot size of one, that is $1,000. A lot size of zero point 0.1, that is $100. You can imagine the profit you can make from that. So please, your assignment for the day, you should go and be checking for these perfect precision entry points on the charts, and then you familiarize yourself with it. So I hope you were able to learn a lot in this video. if you want to, have access to our tutors and then get response to your questions, please join the Telegram group via the link in the description of video so that you will get a real-time answers from our tutors. And also, please don't forget to subscribe to this video. If you have any question, drop it in the comment section of this video. Thank you so much, guys. Please like this video, share it with friends and loved ones. Thank you, and see you guys in another video. Bye.